You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton, and I'm joined today with a friend of mine, a partner on our team, and the cost segregation expert with Madison Specs, Mr. Yonah Weiss. Yonah is not only a cost seg expert, hashtag cost seg king, but he is also the host of the very popular Weiss Advice. If you want to go and just get advice on life, investing, business, being a good person, he has some really amazing guests on there. Check it out anywhere you get your podcast. He's also a notable people connector. He loves making connections. He is just a powerhouse on LinkedIn with getting people engaged and having mass community involvement in his posts. Yonah, welcome to the show. How are you doing, brother?
Thank you very much, Chad. It's a pleasure to be here, and I love that introduction. Thank you. I'm blown away by the accolades, but really, it's all kind of summed up by adding value. I mean, that's really what it's all about. Whether it's from the podcast to the LinkedIn to the cost seg, helping people save taxes, like that's what I try to do.
That's really where it is. Well, Yonah, before we get into our lovely topic today of the cost segregation experts' take on the real estate market today, tell us a little bit about yourself, man. How did you get into cost seg? Was it an accident? Why do you love podcasting, LinkedIn so much? Who is Yonah?
It's amazing. It's all work in progress. Life is a work in progress. And so I wouldn't call it an accident, stumbling into cost segregation, although it definitely wasn't planned. There was a greater plan from the one above. That's really the truth. And opportunities come my way, and I just kind of see where they take me. And that's really been the story of my life in a lot of ways. I spent many years living in Israel as a teacher, studying, and at a certain point, I was like I said, teaching doesn't necessarily pay all the bills, and had a growing family, and decided I need to do something a little different. Started getting involved in real estate, and doing some commercial mortgages, and then doing some residential brokerage, some fix and flips, getting kind of my feet wet in a lot of different ways in real estate. And this opportunity, like I said, came my way to work for this amazing company, Madison Commercial Real Estate, Madison Specs. And I took it. And really what they were looking for was in the business development side. And I really combined my teaching skills and just my people person, like connecting skills, which just came naturally to me, into the role that they really needed. And thank God over the past 5 years, been working there, have really helped the company grow tremendously. And it's really a testament to kind of their belief in me just letting me do whatever I want, and kind of finding my own path, which is what I've done. I kind of forged a way, like you said, on LinkedIn, using that platform, I think in a way that it's really meant to be used, which is just connecting people and building communities and helping people engage and see what the power of personal branding and social media is when it's used for the good. So that's kind of a little bit of the background story of how I've gotten to where I am today. And like I said, the same thing with the podcasting and the LinkedIn. It was not in the plans, was not in the cards, but just kind of happened. And I've been loving it and keep it going.
That's awesome, Yonah. And I'd be doing you a disservice if I didn't at least give a little plug to Madison Specs. We use you guys on every deal that we do a cost segregation on. Give us just I don't want to focus on cost seg in this. This is really not a 20-minute topic, but it's something that investors should be aware of. So folks, if you've listened to our show, you've invested with us, or you're an operator in the space, you need to know what this is. And I'm going to just offer up, Yonah, a second to maybe give a little summary about what cost segregation is and how you can get in touch with him for that business discussion. And then we'll get on to the meat of the episode. So Yonah, if you would, real quick, how would you explain cost segregation, in an elevator?
Sure. The Reader's Digest version, the elevator pitch, whatever you want to call it, is simply a tax deduction that you get from your income tax by owning or investing in real estate. Okay. Besides your personal residence, any property, business property, rental property, you get to take literally a tax write-off of the entire value of that property, right? Minus a small amount for land, which doesn't depreciate. And that's called depreciation. And that's an amazing, almost like gift from the federal government saying, we like what you're doing, investing in the economy, like follow these rules, like do what we say, and we'll give you this reward to actually take this right off. But you don't get to take it all at once. You get to spread it out over 27 and a half or 39 years. It's a long process to take that deduction. What cost segregation does is it breaks down the property into its individual components. And some of those components you can actually take as a tax write-off right away in the earlier years or the first year of ownership, which is much better if you're trying to create more cash flow, especially nowadays with inflation the way it is. I think people are, for the first time, realizing how important it is to have, more cash to be able to reinvest in income-producing properties. Like, why would you give that money to the government if they are telling you, here, take it back and use it in the meantime? And so that's really what the strategy of cost segregation is to use those potential tax deductions now when I can actually benefit from it. And, in a nutshell, that's what we do.
Yeah, it's fantastic. Y'all, I can't recommend this enough. It's not for everybody, but it is for anybody. So reach out. I'm going to give you a plug real quick. How can they get in touch with you? And then we'll get on to the episode.
Best place to find me is on LinkedIn. Believe it or not, that's tell us you listen to the Real Estate Runway podcast. Love to hear about that. You can also just go to our website, madisonspecs.com.
Fantastic. And folks, that will be in the show notes. So no worries if you're driving, that's all good. But now, Mr. Yonah has seen not only every deal that I've done, but pretty much every deal that Madison Specs has touched across the continental US these days. And so what I'd love to get into now is, from someone who has the unique perspective of seeing the majority of deals that are done across the nation, what takeaways is he finding? What generalizations is he able to make about the market and how deals are done today? So, Yonah, I'd love to just maybe open it up and say, man, what's the first thing that comes to mind when I say, what are you seeing in common today with all the deals that you've seen?
The first thing that jumps in my mind is a few years, 3-4 years ago, I remember distinctly hearing from someone who was a very seasoned investor saying that the markets are too high right now. There's going to be a crash and cap rates are too compressed. And I'm just saving all my cash, waiting for that to happen and waiting, keeping the powder ready, whatever they want to call it, right? All those catchphrases. And looking back, and at the same exact time, that was one individual. Okay, maybe there's a couple of people. Robert Kiyosaki has been saying that for 10 years, right? There's going to be another big crash. But this person, someone I respected, they were experienced, but the vast majority of other people were just hustling and finding deals. And to me, I was like, who should I listen to? This one individual guy or the vast majority of other people who were making, finding deals and finding ways to make deals? And I think that kind of sums up the answer to your question, Chad, which is I've seen, like you mentioned, Madison Specs, just from the cost seg company alone, we also have, we're one of the largest national title companies, Madison Title, commercial title. We've, doing over 10,000. I can't remember the exact number of deals we do with that, but cost seg, we did over 5,000, studies in 2021 alone. So we've seen every asset class that's out there, from multifamily to self-storage, to mobile home parks, to retail and industrial and office and you name it, everything. And the common denominator is people are out there finding deals, closing deals, getting things done, and making money. And it's not, maybe it's a bubble, but it just keeps expanding and people are getting deals done and we're looking at, great returns. And so I think the lesson that I learned was to get involved. I mean, for me personally, like I've started investing as well and started getting involved passively and more involved on the active level as well, because, they say, and I take all the lessons from great people like you, Chad, and people that I interview on the podcast, the best time to invest in real estate is today, or is yesterday or whatever. The second best time is today. Right. So you gotta just get involved.
Yeah, I really love that because, and guys, I'm not saying that individual was a Chicken Little, because it sounds like he's a very astute investor. And from what he had seen, or she, from what that person had seen, it was very much times are very different. And so the comfort level is not there. And so what I'll tell you is, invest when you got to be a little uncomfortable, but don't invest outside of your comfort zone, especially when you don't understand what's going on, because that's what did Warren Buffett say? Only invest in things that you understand, and that includes the environment. If you don't understand the environment, be careful with that. So what I think is a pretty cool lesson to take away from that is there's always going to be someone saying the sky is falling and the world is going to end and things of that sort. And it probably will one day. Every day that we go without a crash, we're one step closer to the next one. It's just a fact of life. Every day you go without dying, you're one step closer to when you will die. I mean, it's a fact of life. It's going to happen. As long as you stick to your fundamentals and as long as you focus on, making sound decisions and think about your downside, what's the harm? I mean, things may not be as rosy when the crash happens, but it only matters if you sell.
Right, exactly. And, I just saw someone today mentioning another client of mine saying very profoundly that he doesn't invest in, high-end luxury, class A properties because even though they're great and the returns are great and, the clientele is great right now, but in the last crash, that was a subsection asset class that didn't do very well. And so kind of looking in the long term, especially if you plan to hold for long term or at least conservatively predicting that a crash may happen and there may be some downturn, you do have to kind of plan and make sure that you're making wise investments and not just for the shiny object right now.
Yeah. What I love about, that discussion is, history, people say history repeats itself. I would challenge that. And I would say, history sings harmony with itself. It does not always, the exact way that the last crash happened will not be what happens in the next crash or the next crash, but similar fundamentals and behaviors may be similar. We didn't predict except for a couple of fund managers and things like that who they made a great movie about. We didn't predict 2008, right? And we didn't predict the pandemic. That was a recession, whether we say it was or not. It was artificially juiced to be minimal, right? But that was a pandemic-induced recession. Who knows what's going to cause the next one? That, to your point, that luxury property, all we can do is look back and try to plan forward. That luxury property might be the best thing since sliced bread in the next recession, because who knows what's going to cause it, right? So sit on the sidelines or get in there and make some money while you can and do it in a way that you're comfortable and safe.
Right. And I love the fact that when you have investing firms like Quattro Capital and others that are looking at alternative investments, are looking at finding ways to diversify and figuring out ways to, not put all of your eggs in one basket, so to speak, because there are many different ways to make money in investing and in real estate, even within real estate. And so one of the things that's fascinating to me is, yes, we have clients that focus only on mobile home parks, and we have others that focus only on, class B, multifamily, and we have others that only do self-storage. But then I have, always have these clients that are doing a lot of different properties, and one day they'll send me a retail property. The next day they'll send me a multifamily property. The next day they're doing a ground up development. The next time they had a self-storage. And I was just like fascinated by that. And I asked one of them, someone who's very successful. And his answer was, yeah, we started with one thing. We got great at it and we found the right team members and we built it out from there and tried the next. And we found the right team members and built that out. And that gave their investors more diversification as well. And so that takes obviously a great leader and a great kind of team to build something like that out. But that's something that I find fascinating as well, because you don't necessarily need to stay just in one lane, but you do need to make sure that you do that lane, whatever lane you are doing it really, really well until you can kind of branch out to the next one.
I really love that conversation because, this leads to a whole concept that we as entrepreneurs struggle with. And it's called, Dan Sullivan's version of that. I've mentioned it many times on this podcast, is who, not how, right? And so it's about finding the right who's to help you with the thing you're trying to accomplish, not figuring out how am I going to be the expert in figuring it all out, right? We all have 168 hours a week. For example, I desire to do a cost segregation analysis on my properties. I could figure out how to go get licensed to where the government will respect my engineering designation to where I can do that in a proper way. and probably spend a lot of time and effort doing so. Or I can go find someone who knows how to do it very well, like Yonah and his team, and pay them appropriately to do it. And so it's the same kind of thing that we're talking about here. Those success stories you've talked about, who have become astute and capable in multiple asset classes. I mean, are they doing 100% of the things in their business, or like you said, they built out the right teams?
Exactly.
So that's a very interesting thing to look at there. Wow, I love it. So okay, where do you see? I mean, you've been watching a lot of operators like myself. Like I'm not going to throw names out, but I know you work with a lot of people that we know as well, and big players out there. Are you kind of getting any indication on what are things moving towards? Are you seeing certain asset classes be, we know what the research says, but what are you seeing in terms of volume of deals? Are certain asset classes starting to be the next thing? Do we smell a change happening? What's some of the wisdom from Yonah and all the things that he sees here?
Every asset class is just getting more and more competitive. I think mobile home communities, mobile home parks, whatever you want to call it, is one that is a great example of that. That started out being, decade ago or 2 decades ago, trailer parks, right? And trailer parks were a stigma. And we talked about this on Weiss Advice a couple episodes with different mobile home park operators. And what I gathered from that is it evolved, and it evolved to the point where it used to be that banks wouldn't even lend on those type of properties, or if they did, they were really bad terms, or not non-favorable terms, I should say. And Wall Street didn't look at them. And then there came a change over time where these parks got much nicer, and people were putting more money, more community involvement into it, et cetera. And banks became more friendly towards that asset class, and Wall Street started paying attention to that. And until today, where it still may be a place where you'll find the best, cap rates, et cetera, but it's evolved to the point where it's very competitive to multifamily in a lot of ways. And there are a lot of asset classes like that. What I am seeing is people being creative and finding out ways to add value, and not just in the traditional way of just raising rent, but finding redevelopment, or finding repurposing, or adding different amenities that can make more money, or can do things like that. And that's something that is really across the board. I mean, you name it, from multifamily. If you have a property, maybe find a way. And I know Erin, talked about this on one property she has, building another building, another few units or whatever on some empty space on the land, or building some storage facilities for the tenants, or building Amazon lockers, or whatever it is, finding ways to add value to the tenants and creating a community feel. There's so many ways to do that. And that's what I'm seeing people being successful, because competition is out there, and it's really, really difficult to differentiate yourself and to be, find deals. First of all, to find deals, find good deals. And second of all, to actually make a business plan that will be a win-win, not just for the residents, but for the investors and for yourselves.
Wow. If I can read between the lines on what you just said right there, what you're saying is, to get deals done today, is you kind of have to be creative a little bit, right?
Yep.
And I've often been told you have the 3 I's in any asset class. You have the innovators, you have the imitators. You can't see my fingers. Sorry, guys on YouTube. You have the innovators, you have the imitators, and you have the idiots. Okay. So what happens? You first have the innovators who are like, wow, gee, I really don't, it doesn't make sense to build an apartment community right now, or a mobile home park, or whatever it is, but I can see that one over there. It's a little rundown. I wonder if I put a little money into it and charge higher rent, that might create some value, right? And then you have imitators, and a lot of other people like, wow, he made a lot of money doing that. I wonder if I can do that. And then eventually you have a lot of imitators, and then the demand for that product goes up. And then you have the idiots who are trying to catch up to the imitators, and paying the ridiculous prices. So that does happen, over time. But I think the message here is as a value adds a very loose term, that everything's a value add right now when it's being sold. But, to a value add deal means you have to add value. And sometimes that doesn't mean only the playbooks that you've seen time and time and time again. You can only run so many flea flickers before the defense figures it out, right? To talk football a little bit, eventually you have to get to the point where like, wow, to Yonah's point, what would the residents appreciate today? Do they still want a swimming pool, or would they rather have Amazon lockers so that their 50 packages a day are safe while they're at work? I mean, it's always about what can you do differently, or how can you spot value where others miss it? What do you think about that?
Absolutely. Exactly like you said, being creative. Creativity can come in so many different forms. And that's going to be the true success, because when you're dealing with so much competition and you're dealing with everyone's doing the same thing type of thing, you have to go out of the box and you have to think of ways to do things. And that's what I love, seeing people think outside the box and doing things differently from the norm. One example of that that just came to mind right now is short-term rentals. Now, you can't necessarily do that on multifamily buildings to the same extent. We had Daniel Farber on our podcast a while back, who runs a company that builds in his own communities. They own a couple thousand units, and they build within their communities extended stay type contracts where they'll build out, short-term kind of contracts for a month, 2 months, 3 months, et cetera, for traveling nurses, executives, et cetera, like that. So that's a different way, right? And they're making 3 times or 4 times the rent on those units than they are on their traditional units. Okay. So that's another example of that. But short-term rentals in general, it's an asset class that has become, amazing. I know a lot of people have done amazingly well with returns on that. And it's something that can be done from the comfort of your own home. You don't have to have a property manager. You can learn how to do it yourself and not spend a lot of time on it. So you don't have to be, Warren Buffett in order to invest in real estate, right? You don't have to be Quattro Capital to invest in real estate and to get good returns, but you do have to educate yourself a little bit and figure out ways. And for a lot of people, being totally passive and finding great syndications is the best use of their time and their money. But for others, doing a little YouTube education or Facebook group educations or podcasting educations and finding a way to make a little effort and making some returns on money, especially when deals, don't come up every single day. Like, what happens? You got some money in the bank right now. It's not doing well sitting there. You better put it in something. So figure out ways to make it work.
I'm going to let that be the mic drop moment today. I mean, basically the culmination of this episode, in summary, yeah, we're in an interesting time where maybe it's a bubble. Maybe it's, we skipped a recession and we're continuing on. I don't know. But you have to be smart with where you're putting things. And that just means educate yourself. And it means don't put money where you don't understand. Educate yourself. And then, whether it's by yourself or, in real estate and alternative investing and a syndication, whatever, look for places where additional value can be added, right? Look for things that maybe are somewhere on the 3I scale, maybe a little somewhere between the innovators and the imitators, maybe not all the way towards the imitators to the idiots, but somewhere in that new area where maybe some newer things are happening. Maybe it's a hotel conversion, learn about it. Don't just drop money in it because it sounds cool. So fantastic stuff. All right. We're going to call that the Weiss advice of today, trademark, sorry. And we're going to go to the 4 questions, the the 3 questions, the Quattro Trio that we ask everybody on the show today. So before you get out of here, here we go. Yonah, what is your superpower in this business?
I think my superpower is connecting people, is finding, the right people who match up with one another. And not that I go out of my way to do that and to think about it, but it just kind of comes to me, and opportunities come my way so many times that I know who's doing what. It's very easy to just make those introductions. And so that's something I love doing. I'd
agree with that. And it does seem like you go out of your way because you're always like reaching like, hey, what about this? But it sounds like it's very natural to you. So I appreciate that. All right. Question number 2, Yonah. We've talked about a lot of really cool things that make you who you are, but I'd love to hear some sort of failure that you had in life. It could be life or business, but what did you learn from that failure?
Recently, I'll just talk about something a little personal. Recently, I had a son who was in school and struggling a little bit. And, we had to sit down with the principal and sit down with the with the teachers and had a whole meeting. And what I found was, I wasn't the best student when I was growing up, and I had my own challenges and my own struggles fitting in and following the rules, which many teenagers probably do. And so let me just back up for a second. Having teenagers, okay, let's just stop there. It's challenging whoever you are, wherever you are. But the comfort that I had was remembering that I too was a teenager, and I too messed up a lot, and I too got into trouble and did things, and finding first of all, just having the gratitude to know that, yes, thank God this is the situation I'm in, that I have a teenager who's doing this. But secondly, figuring out what it is, what's really bothering, like what's, because it's something I didn't really look into too deeply, having a bunch of kids, you get to spend a lot of time with all of them, but on an individual basis, I realized I needed to spend a little more time, go out of my way and taking time. So that's one thing that I struggle with. And, thank God I had the right mentors and advisors to kind of point me in the right direction to be able to handle the situation. And we're still working through it, but it gave me the clarity to know that I need to spend like a little more personal attention, time out of the way, which is difficult, time-wise with my schedule and with schedule and school, et cetera. So, but going on my way to do that.
That's fantastic. And, sometimes the man above has a different plan. I think I needed to hear that because with my two little ones, I'm kind of going through something similar, different phase of life. But so thank you for sharing that. I think I needed to hear that as a dad as well, Yonah.
Enjoy them while they're young, Chad. Enjoy them.
It changes fast. I've already got one who's now crawling across the floor and looks back at me and smiles when I tell him not to do something. So pretty funny. Okay, last question. One of Quattro's 4 pillars is philanthropy. And so we love to invite our guests to share any sort of philanthropic venture or anything that's near and dear to their heart so that maybe our listeners will support that on your behalf. So is there anything, where you tend to find it on your heart that you like to donate, give, or support that maybe our listeners could do the same?
I give a tremendous amount. A lot of what I give towards is individuals who I know, and I myself was in a lot of financial struggling moments when I was a teacher and things like that. And I had to turn to people. So I know what that's about. I try to support, individuals who come to me and I know them and things like that. But in Israel, there are a ton of communities that are really struggling, a lot of poverty, and giving back to some organizations there. I can mention a few here. There's one called Shoshanas HaMakim that's going to be difficult to spell. I'll give you the spelling later on. There are many, many, many more, like hundreds of more. And literally people just struggling to put bread on the table and things like that, or falling on financial hardships, death in the family, health situations. Those are things that are near and dear to my heart.
Folks, as always, before I let Yonah get off this call, I will get a couple of those names and links and put them in the show notes. So no worries, scroll down if you'd like to support there. So, all right, everyone. We've already gotten Yonah's contact information, but one more time here at the end, if you don't mind, sir.
You can go to madisonspecs.com. You can email me at Weiss@madisonspecs.com, or easiest way is literally just to find me on any of the social, but it's specifically LinkedIn. That's where I like to connect the most. So please mention you heard us on this podcast and would love to connect.
All right, fantastic. Well, Yonah, thank you so much for coming on the show, friend. Everyone else, until next time, this has been another episode of the Real Estate Runway Podcast. Over and out.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.